Oh man, so Bitcoin down almost 3% a day after a disastrous CPI reading. Where are we heading to here? We're at this precarious level where we could be falling back down to 17,600, or we could see a relief rally. We're going to look at the key levels in the charts and determine what is most likely here. We're going to go through the on-chain metrics. We're going to look at the macroeconomic factors as well, so make sure you hit up the like button. Don't forget to subscribe. As always, these videos are brought to you by BYBIT and BitGet. There are affiliate links in the description, so if you're looking for an exchange to trade with, if you want a bonus, just get yourself set up on a first trade for free using the bonus. Links are in the description. Go ahead and do that. Now, what is going on? We're down 2.7%. Over through the night, we had a crazy little rally where people were getting excited up to 20,000, but you've seen we've given that back up today. We can see the US stock markets have literally just opened up at the time of recording. Dow Jones down 1.65, 1.54 down on the S&P, 1.31 down on the Nasdaq. What is going on? Why are they down? There's a bunch of different factors. Let's quickly flick through them for you guys. We've had wholesale PPI figures came in at 11.3%, just 0.3% off the record high of March. So again, prices coming in high here on the Producers Price Index. Also, JP Morgan missing quarterly earnings. They fell. Stock prices has fallen a few percent. Earnings fell 28%, and they've halted their buybacks as well. Remember, now that we've moved on from inflation, which I'm also going to cover off, we know that earnings are now coming into focus. The markets are looking towards earnings to see if there is a likelihood of recession. And somebody who thinks there is a recession are the Bank of America. They've come out and they're warning that US will fall into recession this year as worrisome forces grow. So more and more big names are coming out and accepting the fact that recession is getting closer. If we look at the break even, okay, this is your 10-year minus 2-year spread. When this falls below zero, that the black line here, when this falls below zero, that normally indicates what a recession. This is called an inversion of the yield curve, and normally has been very, very successful at indicating a recession, which is why most people already feel like we are in a recession. Let's come on to the Bitcoin price now, just to take a look at what's going on. We are ranging in this pattern. We are forming a bearish continuation pattern. I'll show you the same pattern which I've shown you for the last couple of days now. We've done this consistently of Bitcoin, where we've touched the top of this channel here. We fall to the downside between the CPI and the FOMC meetings, and then we consolidate. Then we fall, then we consolidate. Are we going to fall from this pattern and see an extended move which would take us below our 17,000 low, maybe even down to levels such as 15,000? That's what we need to watch out here. Now, don't be surprised to see if you see a little bit of relief rally, right? Like we saw the rally last night and everybody was getting excited. All that was a bounce from here up to here. That's nothing. Even if you run all the way up to the green line, up to 23,000, you're still in this bear flag. You've got to face the reality. You're still in this bear flag. And the question now is, when is this going to decide to fall over? Is it going to do so now, or is it going to wait a number of days? Because the FOMC meeting is on the 26th and the 27th. So you've got this space here between these two lines for Bitcoin to start tumbling. Speaking on the FOMC meeting, you can see that since yesterday, when we covered off the disastrous CPI readings live, the market has completely U-turned. The CME futures have now priced in a full basis point interest rate hike. Just before the CPI reading yesterday, this was sitting at about 6-7%. In other words, most of the market just priced in 75 basis points. That's now flipped, and 88% of the market has priced in a full basis point increase. So they're saying to Jerome Powell, we know you don't want to do a full basis point, but it's time to put on your big boy trousers and go hard with the interest rate. The market doesn't mind. We'll price it in for you. Just get on with it. You're damaging the economy. And ironically, this could be what Jerome Powell's looking for, right? Maybe Jerome Powell was using a bit of reverse psychology to say, the markets, you do it. I'm not going to dump you into recession. You price it in yourselves and do the job for me. So it's very interesting, the gamesmanship that is going on here. Back into the price chart here, if I show you a different visualization of this, you can see we're channeling between these two green lines here, and the question is, what are we going to see? Are we going to see us run to the top of the channel, back up to the kind of 22,000 level, or is that enough? Are we going to start falling now back below 18,000 to test that 17,600 low? That is what we're looking out for. Now, longer term, what is the picture? Have we hit bottom? Are we at capitulation? What is going on? Let's take a quick look. And what I wanted to touch upon first was this, and this is looking at the previous drawdown. You guys have seen me share a variation of this before, and this chart is from Glassnode, but what I want to show you, I'm going to pop my picture out of the way so you guys can see very clearly, is if you look at the previous bear market, You fell from your all-time highs of 20, and it took 11 months to then get to the 6K level. Once you got to the 6K level, everybody thought this was the bottom. Look at the consolidation there. You had a period of consolidation. Everybody thought it was the bottom, and then from 6K you fell 3K. That's another 50% fall in a matter of the month, falling to your lows here back in the 3K region, which then meant an all-time retracement of 83.6% at its worst period, okay? And that lasted for 4 months after you've hit your low point. Now let's compare that to what we're seeing here. Now Glassnode have decided to measure this from the 64K previous high, which is being generous. You could even argue that the time starts ticking from the 69,000 in November, but let's take it from what they're saying, which is looking at the summer figure where you hit 64. So since then, it's been 14 months now where it took to get to the 30K mark. And then once the lunar situation happened and more capitulation, we had our further breakdown down to 20, which people weren't expecting. Now the question is this the full retracement down, or can there be some more? Technically speaking, the previous retracement was 83%. We've only fallen 72%. Now, that doesn't mean that that's, okay, we're not going to fall now because, you've fallen 72%, therefore you have to fall 80%. No, that's not necessarily true. The retracements can get less and less with each bear market, right? The Bitcoin's becoming more mature, more adoption, more big corporates using it, big institutions are using it. Therefore, maybe it doesn't have to retrace to 83.6. But what we do know is that the previous, once it found the low at 3K, it was sideways for 4 months. So that's what we're looking out for here. Are we going to stay in this kind of pain period for the next 4 months? Now, interestingly, what you can look at is look at the volume profile. Again, shout out to Glassnode. They're not sponsoring this video at all. They just provide some really nice charts, which I like to use. So I'm giving them credit for producing this data. And as you can see, let's follow this GIF here, and you can see the volume. This is the distribution. See how the volume starts from all-time highs and it moves across to 6K. This was in the previous bear market. And then eventually this capitulates and the volume comes across here there. So the volumes finally come across to 3K. Now, if we look at the comparison of this cycle, let's take a look at the same thing this cycle. The volume falls, it comes to this 30K level. You'll see it come here. And then you capitulate and it came to the 20K level. Do you see that? It's just come to the 20K level. And now the question is, how long is it going to stay at this 20K, 18 to 22 kind of range before we can start moving back to the upside? That's what we need to look out for here on this redistribution. And that's exactly what it is. It's just a redistribution from all-time highs back down to the lower price points. And that's what you're going to notice. Now, interestingly, is if we look at the long-term holder SOPR, this gives us an idea of spent prices, okay? These are people who are spending. So what I want to look at is let's focus on the 2014-2015 bear market here. Now, what you can notice is you were in this bear market for 402 days. And in that period, you had a low of 0.5 here. That means there was 50% losses were being spent by long-term holders. Long-term holders were spending at 50% of the price they were buying the Bitcoin at, okay? Very, very important. If we look at the 2018-2019 bear, that bear cycle lasted less longer, right? It was 328 days. And you saw the low was still 52% of the buying price, okay? So long-term holders were sitting at 52% losses. Now, let's bring that to where we're at now. Let's pop me over there. Now, look at where we're at now. The low is 0.67. So the long-term holders, I say only, but they're only 33% losses, right? Versus 52% and 50% in the previous bear markets. And we've only been in this since for 50 days. So yes, we can argue the cycles can shorten, right? Can shorten from 400 days to 320 days. But can it really shorten now to 50 days that we're just going to head back to the upside? No. I think we're still in this pain for a little while, at least 250 days, 300 days, right? Which would give us another 200 days to go, which is just over 6 months. I mean, that would make sense, right? If that was 300 days, this cycle in the bear market, maybe this one will be 300 days or 250 days, okay? And that's what we need to look out for here on the spent ratio. So they're spending at losses. Now, if we look at this is your market value to realized value. Now, what this is showing you is what the unrealized loss is, okay? So when you look at this, in the 2011 bear, 221 days were sitting with long-term holders sitting at a 68% unrealized loss, okay? They've not sold yet. The previous one was when I was showing you they sold. This is an unrealized loss. So when they look at their portfolio, the long-term holders are sitting at a 68% loss. Now, if we look at what we're seeing here in the 2015 bear market, it lasted 322 days and they were sitting at a 54% loss. If we look at the 2015 bear, you can then see that we stayed there for 138 days at a 36% loss. And if we look at where we're at today, we're only at a 14% loss, but you are in this green zone, which tends to indicate we're getting to those bottoms. But we've only just entered, and if we look previously, we've been in these green periods for 138 days, 322 days, 221 days. So are we just going to pop straight back out after 20 days in this green zone? Unlikely, right? We're likely, even if we have created this bottom at 20k, around 18 to 20k, we're going to move horizontal for a bit. So we're going to have that opportunity, in my opinion, to accumulate whilst we get that final capitulation of those extra diamond hands. Now, if you take those two pieces of data which I've just shared with you, you take the people who are spending at a loss, plus you take the unrealized loss, and you put them together, where those two overlap is what you call capitulation tracking. Now, if you look at this, the green zone is when we're seeing capitulation occur. Okay, so 2014 to 2015 bear market, we saw both of those things happening. Okay, spending at a loss and unrealized at a loss. This is that green zone here, and it lasted for 11 months. If you look at the 2018 bear, that lasted for 6 months. And now what we can see is we've just started ticking green here on this side. Okay, you can just start to see it happening here. So this period here, you are under the line for quite a while. This period here, you are under it for 6 months, and we've just crossed under it now with the long-term holder cost basis sitting at 22.3k. That's your long-term holders are sitting at 22.3k. So about a 6% under spot. They're in loss as long-term holders. Now, something interesting to share with you guys, which is what I want. In fact, before I come on to that one, what's interesting is you want to notice that average long-term holders are in a 14% loss. Okay, so they're at the 14% loss, but people are spending at a 33% loss, which implies that the redistribution is happening from people buying highs more than lows. Really, really important. Okay, so in other words, what we're seeing, let me try to explain that a little bit better. I showed you here that people are spending at a 33% loss. Okay, they're spending at a 33% loss. But when I showed you the unrealized loss, they're only sitting at 14% loss. And when I show you the spot price, you're only at a 6% loss on spot price. So in other words, the people who are spending at that much loss right now, for them to be spending at a 33% loss, they must have bought in at the peaks. They bought in at 60k plus. Those are the ones we're seeing capitulate right now. You're seeing better holding by those who bought in the previous bear markets, of course, because they've got much better cost basis. They were buying in around 20k on average cost basis. So that's what we're seeing right now. We're seeing diamond hands from those who were here for much longer, but the long-term holders who only bought within the last 6, 7, even a year at 64k, 65k, 60k, those are the ones we're seeing capitulate and sell at a 33% loss. Okay, very, very important. Now, finally, if we come onto this, what we're going to notice here is this is the percentage of the supply held in profit or loss. Okay, now what I want to point out is in previous bear markets, again, let's move me out the way there. So if we look at this previous bear market here in 14-15, the long-term loss was at 91%, okay? Now, the long-term holder loss was sitting at 35%, and of that, the short-term holders were sitting at 3.2% losses at the worst, at the lows. Similarly, in the next bear market, you saw long-term holders' loss came down to 34.2, but the short-term holders were in 4.7% of the supply, okay? Very important. But look at this compared to now, just above my head here. Short-term holders are still holding 16.2% of the supply. So we've seen that capitulate down to 3.2%, 4.7% when we've previously hit on bottoms. So this is what I'm talking about when I feel like the capitulation hasn't quite finished. And that is why I still have that feeling. I may be wrong, but I just feel like we're going to go visit that 17,600 again. Maybe wick down to 15,000 before we form our bottom, move sideways for 4, 5, 6 months, and then start working our way up. That's just a hunch I have, because that 16.2% of short-term holders still holding is high. Historically, it's been 3%, it's been 4%. You capitulate them. Those are the ones who are spending at a loss normally, and that's when we formed our bottom. They don't normally have this kind of diamond hands, which is what I'm expecting. So there you have it, guys. There is the bunch of on-chain metrics for us to get involved with. Very tricky time in the market, very tricky time to navigate, but the key is having conviction, hodling, seeing the course, and looking for these opportunities to accumulate. Not financial advice. That's what I'm doing. I'm waiting for these opportunities to accumulate. I'm not chasing green candles. If Bitcoin breaks to the downside on any of these channels, if we see a retest going back down to those 17,600 levels, I will be a buyer at those levels. If we fall below 17,600, I'm going to buy even heavier at those levels, because I don't think we're going to last long. I feel like if we do go to retest the 17,006 again, that's a very lucky opportunity for us. We should be taking it. If we fall below 17,006, I'll be accumulating even heavier, because I think as soon as that capitulation finally happens, we're going to come back to that kind of 19-20 range. We'll be there for a while, and then I think we can start worrying about a recovery to the upside. Hope you guys enjoyed this in-depth video. As always, don't forget to smash up the like button and subscribe. If you appreciate this type of content, let me know in the comments so I know this is the content you guys want to see. As always, if you're looking to buy any crypto, whether it's trading short term, whether it's buying on spot, do check out BYBIT and BitGet, links in the description. Those are the platforms I use to trade these opportunities, okay guys? And again, you can make a lot of money trading these ranges. If you guys want to trade this, if you think this can trade up to the top of the channel and then fall back down, these are opportunities for you to make good income here to the upside and downside. If you're not experienced, then make sure you're only doing so with what you're willing to lose. Anybody new to trading, always trade with a bit of lunch money till you figure it out. Hope you guys enjoyed this video. Smash up the like button and subscribe. Go watch this video, and I'll see you in the next one.